Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, and this is a podcast dedicated to helping accounting professionals start and build the premier accounting firm in their area. It's here that we addressed a variety of topics ranging from marketing and selling to client onboarding, client retention, and quality accounting services to get you paid what you're worth. And as your host, I've been doing this for more than 20 years, helping individuals around the world start and build their accounting businesses, making relationships, building friendships, and at the same time helping them have the companies that they've always desired. Now, in this process, each and every week I have on the show guests, experts in their own right, to help us actually understand things that we can be doing to work on our business. And I am going to do the same today. I'm excited to welcome Randy Crabtree. Randy happens to be someone that I've been looking forward to have on the show because he is also a host of his own podcast, happens to be the Unique CPA, and it's actually ranked as one of the top 5% most popular shows in the podcast spectrum. So that's wonderful. He's also the co-founder and partner of Tri-Merit Specialty Tax Professionals. It's a wonderful program that he's got going on there that we're going to learn about today. But he's also an author, lecturer, obviously a podcast host. He is the president as well of a 501c3 Stroke Survivors Empowering Each Other organization and part owner of an award-winning craft beer and bottle shop in Chicago. So he's got a lot of accolades, but one of the things that I want to point out today that everyone should take note of is first and foremost that he's recently in December listed as ones to watch section of Accounting Today as the 100 most influential people in accounting. And in May, he was actually appointed to Intuit's Tax Council for a third-year term. So Randy, welcome to the show.
Roger, thank you. And that was unbelievable. You did you just shot out that one take, no mistakes, and the voice is awesome. But Roger, thanks. I appreciate being here.
Yeah, this is going to be fun. So co-host to co-host, I guess what we're going to do here is just have a phenomenal episode. You've got a great deal of background in tax, and I'm excited to just start there. And then we've got a variety of topics to go over. But one of the things that I want to do is just for the listeners, let's start with what's the difference in your mind between tax preparation and tax planning?
That's a good one. That's something I've been talking about a lot lately. I do a ton of presentations, webinars at conference, and I teach tax credits and incentives. And I often will talk about the fact that anybody can be a tax reporter. That's just tax preparation. I can report. I can really report what happened this last year without much effort at all. Just look at the financial statements, look at, the W-2s, whatever, if I'm doing a 1040 or a business return. That's simple. But by being a tax a planner or a tax advisor, I'm going to affect that bottom line tax. I'm not just going to report how much taxes you owe. I'm going to affect and do anything I legally can to reduce those taxes. And so in my mind, that is before the end of the year, let's get into planning and let's make sure that we take advantage of every possible tax incentive we can.
I really appreciate your explanation there because I time and time again have conversations with accounting professionals and help them try and realize that there are two different opportunities as to what they can offer as services to the clientele that they service, whether it's individual, business, or both. And it is that distinction between tax preparation, the filing, and the planning, the various strategies that we can implement with our clients to actually help them, like you said, legally reduce their tax liability. And in that process, save them tons of money. But more importantly for us, make good sums of money as tax planners. Wouldn't you agree?
Oh yeah, it's if you can go out and save somebody $100,000 in taxes, rather than getting a $1,500 tax filing fee because I'm a reporter. I mean, you could be getting a value-based billing out of that, and I just saved $100,000 and charging $15,000, $20,000, whatever the numbers are not out of the question at all. So it's not only good for the client, it's good for the tax advisor as well.
Yeah, what you brought up there is this thing that's come up year and year running now, and it's the value pricing. It's something that a lot of people like to talk about, but sometimes struggle implementing in their business. And you just gave a great example of it. If you can actually legally find a pathway for the client to save $100,000 in taxes, for you to have that expertise, that knowledge, that know-how, and the ability to help them in implementing that strategy to rightfully so ask then $15,000, $20,000 in exchange for your services is very doable, right?
Yep. If you are charging more, if you have to have a service, you have to have a reason you're charging for more. You have to have an expertise. But when you are charging more, the client appreciates it. They know they're getting this additional service. They know they're getting this additional value. I mean, you have to show it, but it becomes a win-win for both sides of that equation.
Exactly, because if they went somewhere else, they would have merely just filed the return and the savings would never have been realized.
Exactly.
Yep. So another thing, just to maybe get some terms out of the way, what is the difference between a credit and a deduction from the standpoint of taxation?
Yeah, that's a great question because I get that a lot. It's like, okay, well, I'm already writing off those expenses, so why do I need a credit? Uh, the difference is if I am writing off an expense, a deduction. Let's stay with 100,000. We're already on a 100,000 number. Let's stay there for a while.
All right.
I have $100,000 that I just spent on salaries and wages, and I deduct that off my tax return. And let's just say I'm a corporate taxpayer. Current rates are 21% for corporations. I saved $21,000 by writing off that $100,000 of wages. If I can convert those same wages into a credit, so let's say that $100,000 was eligible for, let's just say, an R&D tax credit for one,
Okay.
or employee retention credit, or whatever, some additional credit. Now, what I've done is I've taken a $100,000 deduction that I saved $21,000, and I turned it into a credit, which I'm going to offset the taxes. So I'm going to not save the 21%. I'm going to save $100,000. I'm going to reduce my tax burden by $100,000. And so in that scenario, I'm actually going to net, because for most credits, I can't also deduct that same amount. So I can't deduct the 100,000, but I turn that into a credit. So I lose the 21,000 in tax savings. I gain $100,000 in tax savings. I net that out by turning an expense into a credit. I end up netting in that scenario an additional $79,000 of cash back into my business.
So it's an either or scenario.
For most credits, it is. Most credits, it's once you create a credit, you have to reduce your expenses by the amount of the credit.
There you go. Good. So this brings up a great question regarding niching. I know as a tax professional, when we're getting into tax planning, it affords us the ability to even go further into this niche discussion. What is niching in your own terms, and how do you think this applies to our conversation today?
Yeah, so we could go for about 4 hours on niching, I think, and we're probably not. I'm guessing that I'll probably lose a few people down the road if we do that. But niching is just such an amazing area for me, and I'll tell you why. One, I'm a CPA. I was a traditional generalist CPA for the first 20 years of my career in public accounting, meaning that I did taxes and accounting for pretty much any industry from a business standpoint and an individual standpoint. And just, you know the tax code. You're not an expert in any part of it. You're very strong in the basics of it. But you're just not. And I'm gonna describe niching two ways. So this is the first way. This is the way I niche.
Okay.
And so what happened is 15 years ago, I got burnt out and decided I needed to stop having crazy tax seasons. And at that point in time, my only thought was I'm going to have to get out of public accounting. I'm going to merge my practice in with someone else, and then I'm going to get bought out. And which is what I did. But what that did for me, it opened up this opportunity to go look at other areas of tax I could deal in. And what came to me was tax credits and incentives. It kind of just found me. And so for what I did, going from a generalist, I became a specialist in tax credits and incentives. That's a specific niche. And that's a specific niche based on tax code, which I had no idea how fun that would be when I first started. I knew it looked interesting. Mm-hmm. It's amazing. And we can go deeper into this, but I want to get to the second definition of niche, but we can go deeper into that in a minute. But it was just amazing because I could dig deep into small parts of the tax code, become the expert, and then be able to communicate that knowledge to others and help their clients save money. That's the niche way I went. What I see as well, which I think is probably more common, is tax individual CPAs, EAs, tax and accounting professionals will become an expert in a niche industry. Like, they enjoy the trucking industry and they are passionate about it. And so they learn everything they can about tax and accounting for the trucking industry. Example I use a lot because I'm passionate about it as well is craft brewery. I want to be I'm personally, I'm not, but I know someone who wanted to be the specialist in tax and accounting for craft breweries. And then you build this niche. And what happens is people see that you are the expert. You're out on social media, you're doing conferences, you're talking at events, and they hear this expertise. It just is an unbelievable way to grow your business when you can share that knowledge you have. So those are the two ways I see niching in accounting and tax.
No, those are excellent examples. And I think niching, just like you were describing, affords us to do something that we can get a lot more passionate about, excited about. You definitely become the expert, and rightfully so, are able to then begin charging more. But it really helps with your marketing. You're able to talk to a very specific audience. And with that specific audience, speak to them directly as to what it is that you offer, both features and benefits, that draws them in to actually pay for your services. So I like niching as a great topic. Now, here's the thing. You chose to go a certain route with your business. Tell us why you went the way you were going. You were alluding to this a moment ago.
I was, and this is something, again, you keep bringing up great topics I love talking about, because this is something, and I've been doing a lot of presentations on this lately, but this is something with me personally. The reason I changed, and I alluded to that, like you said, is I just built my practice way too tax heavy when I was a generalist, way too tax heavy. Spent way too many hours working January through April 15th. Didn't even want to see my office for months after that because I was just so tired. Um, and it just got to be too much of a grind. I actually saw it affecting my kids who were young at the time. When it was tax season, they started acting different. And for me, that just didn't make sense. And so the reason I switched, it was to get out of that scenario. Now, you can get out of that scenario other ways. You don't have to go the extreme that I did to say, okay, I'm going to completely change, businesses or professions. But for me, it made sense at the time. What I did was merged my practice in, got bought out, took some time off, realized I wasn't independently wealthy and needed to continue to work. And then somehow R&D tax credits found me. And I say that with a kind of a tongue in cheek a little bit. There's opportunities in front of everybody every day. Some people will act on them, some people won't. I saw this opportunity for a company to go out and develop a firm that was going to support tax preparers with R&D tax credits like a tax preparer would want them done, fully documented, fully supportable, not playing the audit game, being able to defend anything we did. And so we came up with the philosophy from day one that that's how we're going to build this practice. And 15 years later, it's proved out very nice. So for me, I kind of fell into it. And it was one of the best things that ever happened to me.
So in real simple terms, your niche was developing a firm that actually works with accounting CPA firms.
Yep.
And in doing so, helps allow them to offer services to their clientele that you're helping the firm facilitate and do from an R&D tax credit point of view.
Yep. From day one, our philosophy was we were not going to go direct to clients and sell tax services to somebody else's client, which as a CPA, I would have been a little leery of. What we're going to do is we're going to build a relationship with the CPA firms and tax preparation firms, because obviously not everybody's a CPA, but I always generalize and say CPA. But I'm going to generalize probably the rest of the discussion and say CPA. Any EAs or anybody else out there, I apologize. I include you all. And so what we decided from day one is we are going to go to the firm. We are going to educate them. We are going to help them identify opportunities. We are going to facilitate them being a hero in this whole tax saving situation. They brought up the opportunity. They bring it to the client. They go let them know that they just saved $50,000 in taxes. We're not behind the scenes. The client knows we're there, but we're there to support both the client and the tax preparer. And really that the reputation we've built out for the last 15 years has really allowed that to play out really nicely. And that's what we decided from day one. Go to the tax preparer, not to the client.
Exactly. Now, I'm going to go off into a tangent here because of something you said. I'm curious your opinion of this. You were just speaking that you're going to use the term CPA generically for the rest of the conversation. So I likewise have a similar philosophy, but my term happens to be accountant. I have found that accounting professionals aren't necessarily CPAs or EAs, but if I address a CPA as an accountant, I'm typically not offending them.
Yes.
Nor if I say an accountant to an EA, I'm not offending them. Where conversely, if I'm speaking to a group of CPAs and someone isn't, they're somewhat embarrassed. They're maybe a little shy.
Yeah.
And sometimes people want to point out, oh, but they're not a CPA, but they're not an EA. But everybody's comfortable with the term accountant. So I've kind of gravitated to the umbrella term being accountant. How does that sound?
So I almost 100% agree with what you're saying. I like what you're saying exactly.
All right.
I'll tell you what personally I do when someone calls me an accountant.
Please.
I say I'm not an accountant. I'm a tax professional. Because I do not like the accounting end of things. I do not like the debits and credits and books and all that. That's never been a passion of mine. Taxes are. And so I'm weird. I know I'm weird, but that's what comes in my mind. I'm guessing that I'm one of the few people when you say you're an accountant that doesn't, I'm one of the few people that thinks differently than that.
Well, you're right in the sense that I do know a number of accounting professionals that don't do taxes, and conversely, many tax people that don't like doing accounting. So you're true there. My perspective is perhaps more because of my interactions with business owners.
Yep.
And for business owners, the umbrella term is typically accountant. I've often found that they're comfortable referring to. And then the nuances of it is, are they a CPA that can do audits? Are they an EA? It's those types of semantics within the profession itself. So anyways, kind of a nice little tangent there.
No, and I can expand on that for a second, if you don't mind.
Please.
I'm seeing more and more people get away even from the CPA license. Like, I don't even need that license. I'm not going to do audits. Why do I need to be a CPA? I can do accounting. I can do taxes without getting the CPA license. And I know somebody that's the managing partner of a very large firm, 150 people. He was a CPA. He's still a young guy. I'm guessing he's 40. He let his CPA license go. He said, I don't need it. We don't do any audits. We do tax advising. We do accounting. And so I just let my CPA go. So that might be a trend. I've heard that more than once.
Oh, yeah. No, you're speaking to the crowd here. I actually yesterday had this same conversation. It was an individual that was debating whether or not to become a CPA. And I was just very direct saying, well, do you have any career intentions of actually offering audit services or being involved with auditing? He said no. And I said, well, what are you trying to accomplish with the CPA? And he says, well, I'd like to be able to represent my clients before the IRS and do resolution. I said, well, there's a faster and easier path. Could go become an EA. And he recognized that and realized, I guess I just don't need to go to that extent because he had no intentions of ever doing the audits. And I think that's a good illustration like you just shared, because I've met numerous people, where they are CPAs, yet even on their business cards and so forth, they don't market it, mention it, because they feel like they want to be more approachable in offering bookkeeping or accounting services. So it's kind of an interesting trend. I appreciate you pointing that out.
Yep, no problem.
Yeah. Here's the next thing then. We've been talking a little bit ago about services. You talked about niching. So let me just kind of go down a few of the specialty services that one can offer and just get your layman term explanation of what each is, because some of the listeners may be curious about what those entail and maybe considering, diving into those more deeply. And honestly, I think it'd be good to just be able to speak in terms that a business owner would maybe see value in what it is. So I just wanted to kind of go down, what are each of those? Because some of the listeners are going, what are these two people talking about? So what is start with the one you're doing, R&D. What is R&D tax credits? Why is there such a niche there that you could dive so deep into it with R&D tax credits?
So R&D tax credits, and that was the first thing we started with. And so I got a huge passion with this. And what it is It's interesting because you can find R&D tax credits anywhere. Normally, it's a credit that's taken by a manufacturer, a software developer, an architect, an engineer. It's somebody that's developing a newer, improved product or process. And so and it doesn't have to be newer, improved to the world, just newer, improved to you. And so it's a really interesting area because you'll find now, a manufacturing is a no-brainer. They're always doing products. They're always doing process improvements. They're a no-brainer. But you're going to find hidden R&D tax credits. And this is what I love to talk about. I'm actually a partner in a craft beer bar. Oh, you mentioned this at the beginning.
I did. And I'm going to get to that too.
All right. Well, so, during the pandemic, our bar was shut down. We've always had an online store where people can order beers online and have it shipped pretty much across the country as well. We've got a strong reputation in that. But what happened during the pandemic, we just had to lean more heavily on the online store. And because of that, we spent a lot of time and effort programming an online store, making inventory, talk to POS, talk to accounting, talking to shipping, talking to FedEx, and all these modules that were created to have all these components talk to each other involve software development. And so a bar/liquor store is taking an R&D tax credit, and that's something you probably never would have even thought it happened. And so that's the cool thing where you see things like that happening. And so that's R&D you can find anywhere. Normally, manufacturing and software is the key area.
Good explanation. And I agree with you. Manufacturing and software is where I've seen it. But here's a qualifier, and I'm curious your opinion on this. I have seen many small businesses, although they're doing R&D in their companies, the dollar amount's too small for the fee for the service that you would charge because of the documentation needed. So is there a minimum threshold value-wise to say they've got to have 100,000, 500,000 in R&D before it's actually worth all the effort on your part to document and then obviously take advantage of it?
It depends, and that's a great question. It depends on the industry. So there's a for me personally, our fees are always capped at 25% of the benefit. So the client's always going to walk away. It's capped. We don't charge that. It's just a cap. It's a safety net. And so the client's always going to walk away with, at least 75 cents on the dollar of the tax savings at a minimum. But there becomes a point in time where it doesn't make sense for them because, we're probably going to need on the minimum 5 hours of their time, let's say. Maybe 8 hours of their time. It's a bigger situation, 20 hours of their time, even potentially. And so there becomes a point in time where where's the ROI? Is it worth it to me? If I have a $5 million manufacturer, they very well have a $30,000 credit. And I'm generalizing here. And that if they have to spend 6 hours with us, that's probably a nice return. And so it would make sense to do it. If I have a $5 million software developer, they could have a $300,000 credit because most of what they do is development. And so it depends on the industry where that cutoff is. I can have a very small software developer. It still makes sense. I can have a, maybe 3 or 4 million and above manufacturer where it still makes sense. But each client does such unique things. We don't know until we dig in. And so what we do is we normally will always do a free analysis. We'll get an idea of the number before a client has to decide if it makes sense or not.
Perfect. I love it. Okay, so let's change topic. Let's go to cost segregation. I own property. What the heck?
Yeah. Cost segregation in simple terms, anytime you have a depreciable property, so a residential rental property or a commercial building, let's say, you write that off over a certain number of years, 27 and a half or 39 years. What cost segregation does is goes in and pulls out different components within that building and see if we can depreciate any of those components over a quicker lifespan. Like 5 years, 7 years, 15 years. And a lot of times in a commercial building setting, some of those will be eligible for bonus depreciation, which means you can write it off over 1 year. So what I'm doing is I'm taking expenses that I would have wrote off over the next 39 years, and in some cases, write off a big chunk of it in 1 year or 5 years or 7 years. And a deduction today is a lot more valuable than a deduction 39 years for me.
And the thing that I like about cost segregation that I've found interesting is you're going in and you're dealing with the architect and the landscaper, and you're basically saying, look, we can put in this lighting or we can put in this lighting, and we can do this type of landscaping or we can do this kind of landscaping, and just basically making decisions at the front end that if
Yes.
we did certain flooring, if we did certain windows, all of a sudden you itemize those types of things, and that's where you get your cost segregation savings. Is that
Yep.
a fair summary of it?
That's a great explanation. There's another one that I like to use, which is, let's say you're in a manufacturing setting, and let's say we have electrical or plumbing that has to go run back to the manufacturing floor. If you run that, let's say, through a kitchen or a restroom or something first, you're not going to get the same write-off as if it went directly to the manufacturing setting itself where all the machines are. You're going to get a quicker write-off with that. And so if you can just reroute some equipment, you can affect a higher deduction currently by just doing some planning up front, like you were saying.
Yeah, I find that interesting that you could just make these minimal decisions that honestly, the contractor, the architect, if they're not aware of these things, they just probably do the quickest, easiest type of approach. But
Yep.
if you like you were describing with the electrical, if you just did a certain conduit from a certain box and you did a certain way, it was game changer for the tax write-off. So I love
Definitely.
it. Let's go to conservation easements. What would you say about those?
Nothing, because I don't know anything about them.
In fairness to you, I added it. I added it to my list because I like conservation easements. I find it's a fascinating thing. I love the whole idea that's around it. So anyways, conservation easements, check them out. There's something we can talk about later. Energy efficient incentives. Let's talk about them.
Yeah, so there's two that we deal with energy efficiency, and sorry about the conservation easement. But
No, I threw that in. I wanted that.
I love it. I love it. Energy efficiency, two different things. A 179D, which is a kind of like cost seg. You're accelerating depreciation, but you're accelerating depreciation on a commercial building if I can show that this commercial building is more energy efficient than a hypothetical version of this building in the past. And this is currently $1.88 actually in 2022, a square foot deduction. So a taxpayer with 100,000 square foot building, which is a big building, if they qualify for all of this, we get to take 188,000 of that building and depreciate it in 1 year. The cool thing about this is it's not only a commercial building owner, but if I design a government building, let's say I'm an architect, I think we used architect as an example before. If I'm an architect and I design a government building, government entities don't pay tax, so they don't need this deduction. And what's allowed to happen is the government entity could allocate this, in this scenario, let's say $188,000 deduction to the architect, and all of a sudden the architect has a deduction. We talked about deductions before. They have a deduction on their tax return that they did not have yesterday. And if they have, let's say, 200,000 and they're in a 35% tax bracket, they just save $70,000 on taxes just by getting this allocated to them. So that's the cool thing about the 179D. And then one more thing, 179D is currently planned to be enhanced in the Inflation Reduction Act, which, I don't know when this is released, but by the time this is released, I'm guessing that'll be enacted into law. It's going to significantly increase that amount of that deduction. I think it's from $1.88 a square foot to anywhere between $2.50 and $5 a square foot. So it becomes a very significant savings for both the building owner or the designer of the government building. And in the IRA, the Inflation Reduction Act, they are going to allow nonprofits to now allocate this deduction to designers as well.
Okay. I'm glad you said that. Thank you.
Yep.
All right. Let's go from that to the work opportunity credit.
Well, I'm sorry, but let me go back to 45L. One other 45L, energy incentive. Okay. Yeah, I kind of stopped in mid-thought there, I think. 45L is another energy incentive. This one's a credit, and it's a credit for developers, whoever owns the property when it's being constructed, developers of low-rise residential property, so 3 stories or less above ground. if that's the case and it meets energy efficiency requirements that are defined in the code, the developer can get anywhere up to, or can get $2,000 per unit credit. And so a credit, again, we talked about credits, a straight reduction of taxes. If you develop 100 units in the year and they all qualify, we have $200,000. We're going to reduce our taxes. And the Inflation Reduction Act actually enhances this as well, where I think the numbers are, it can go anywhere from $2,500 to $5,000 per unit credit. So again, a very hefty savings if a developer qualifies.
I'm loving this because as the listeners are hearing these are just one after another of opportunities they have to learn, to understand, and to take to the market, and obviously become the experts in their area providing these various services. Or with you, obviously reach out to you and basically kind of tag team, if you will, these types of services. So this is going great. Let's talk about the work opportunity credit.
Yep, and that's the last one that we really work on. I'm going to be looking at the easements, but this is the last one we work on. And this is a credit, really, you can look at it as a new hire credit. Am I hiring multiple new employees every year? So a common user of the work opportunity tax credit is, let's say, like a fast food restaurant or a manufacturing setting or some area where there's quite a bit of turnover or quite a bit of growth with a lot of new hires each year. And what we do in this scenario is we look at those hires and see if they meet either some kind of demographic definition or live in a geographic area that allows us, and usually there's a barrier to hiring or to getting employment for these individuals. If they meet these requirements, the taxpayer who hires these individuals can get anywhere from a $2,400 to a $9,600 credit per new hire. And again, credit straight offset of income taxes.
Yeah. Now let's talk about one more, the ERC, Employee Retention Credit. A lot of people are floating that around, reaching out with that. What's that all about?
And I guess I lied before because there is one more we do, which we do a lot of, is the Employee Retention Credit. I can get on a soapbox with the Employee Retention Credit because there is so much misinformation out there on the Employee Retention Credit. I'll say right off the bat, not everybody in the country qualifies. And I keep hearing everybody qualifies. And that is by far, far, far from the truth. But if you do qualify, it's a huge benefit. And you can qualify if you were affected by the pandemic, one of two ways: a significant drop in revenue. And that definition changes from 20 to 21. And I won't go deep into that, or I won't go into that unless you want me to at some point.
No.
That's what I figured. Or you were affected by a government mandate that restricted your ability to conduct business. And it has to be you have to be able to show that I was restricted. I had to close hours. I had to reduce capacity. I had to do something based on a government mandate, not a government suggestion. And if that's the case, I qualify. I can get anywhere. I mean, if I qualify for the entire period, which is March 13th of 2020 till September 30th of 21, which not many clients do, but if you did, one employee can be worth $26,000 of refunds. It's a refund check that the government sends to you. So this is an amazing benefit, but it's an amazing benefit to companies that qualify. Unfortunately, there's so much potential cash flowing from this that I'm seeing, in my opinion, credits being taken that shouldn't be taken.
Yeah. Unfortunately, I think my clients, myself, I'm getting, I wouldn't say harangued by this, but they're coming at it from all these different angles. And you're right. A lot of them imply that everyone qualifies. And that's just not true. So I appreciate that clarifier. Thank you. So that was a wonderful list of some great opportunities as tax professionals to choose to specialize in planning strategies that enable us to actually make some very good money providing quality services to our clients. So that was just an excellent little summation there. So this is where I want to go next. I know you're big on culture. I know that you talk about that quite a bit. One of the things that I wanted to kind of dive into here is, as accounting firms, CPAs, and so forth, how do we deal with the staff the struggles we're having staffing our firms. There's a lot of people out there that I talk to that are really trying to grow. There's a big demand for their services, but they just can't find that quality staff to bring in-house to actually do the work. Do you have any thoughts on that?
Yeah, I have a few thoughts. And obviously right now, staffing, like you said, it's a huge issue. The other issue that is the problem why staffing is partly an issue is because accounting firms can go get all the business they want right now. Business is out there to be had. It's just unbelievable, the opportunities. The problem is we can't go after it because we don't have the staff to do it. And so a couple of things from that. One, staffing, I don't want to sound negative, but staffing issues sometimes are the result of maybe, and I'm not saying, because everybody has different scenario, of just not changing maybe the setup that you have in your business. It's amazing. I look at so many CPA firms right now want to get back to the office, have got back to the office, and there's a disconnect between leadership wanting them back in the office and staff wanting to go back to the office. I think that's part of the problem. I think there has to be a nice mix in there, a lot more flexibility. It's, I'm 60 years old. What I did for the first 40 years of my career is different than the way careers are going now. I see that, I think. I'm not sure that's always seen. And it's just, you have to be more flexible. You have to be not micromanaging. You have to, if you hire good people, you have to realize they're going to get their job done, whether they do it at midnight or they do it from 9 to 5. And if you have that flexibility and give people that flexibility and allow them to do their job, I think that helps a lot with the staffing issue. But then the other thing is, because there's so much business and we have a restriction of staffing, I think a lot of firms have to look at restructuring what's important to them and what client base, and we touched on this a little bit before, what client base do they want to work with? What is the passion? What is their strengths? And that sometimes it's a subtraction. You addition by subtraction. There's just some clients we just can't service anymore because they're no longer in our expertise. They're no longer the clients that we're going to be able to value bill. And so I think one of the way we can help with staffing issue is just restructure the clients that we do service and get to those niches like we talked about and those passions like we talked about and our expertise that'll help us grow that value-based billing.
I appreciate you saying that because you touched on two things that are very important. One, I, like you, when I started this more than 20 years ago, I literally was wearing a suit to work every day. I distinctly remember, and I'm just going to round it up, I would imagine maybe 15 years ago within the office, there was this big thing for dress down Fridays. And there was pushback on management saying, we're not going to dress down. I distinctly remember the daughter of the owner pushing that we could at least wear Levi's on Friday and it being pushed down. So we were going through this change where today I'm wearing Levi's in the office as I speak to you now. I haven't worn a tie in probably more than a year or 2 or 3 for that matter.
Right.
I do occasionally wear suit coats, but I don't wear the tie. And it's definitely a lot more casual. And so all of a sudden you can see that evolution. Well, equally so with this whole COVID experience, there's a lot of people that want that flexibility to work from home. And fortunately, technology got to the point that we're not working off of DSL uploads on our computers from home. There's not this, I got to use the phone instead of calling. I've got to use the phone line to actually get on the internet. Those days are gone. We have good streaming. We've got good bandwidth. All of a sudden, we can do work from home in a secure manner and lots of flexibilities. But is the company conforming to those to give the employees the flexibility to have that work-life balance that many of them are looking for today? And then I liked how you talked about passion. Are we aware of the strengths of our employees and the interests of our employees to leverage those so that they can work on the projects and with the clients that interest them? Does that make sense?
It does. It sound like I'm going to brag for a second, but we've been in business for 15 years now. Just at, I think, May 7th was our 15-year anniversary. We're at 60 employees right now, or around 60. In that 15 years, I think we've had 7 people leave, which is a pretty amazing number. And I think we do a really good job of making this a open place where people feel free to share their ideas, where people feel free to come up with new service offerings, where people feel that they can have the flexibility of doing their job when it needs to be done, where it needs to be done, and how it needs to be done. And that's unbelievable. We do not have a problem finding people. And I think it's partly that, but it's partly we're not a true traditional accounting firm too, which is stigmatized somewhat too with these long hours, which has changed, but these long hours and high stress. And so that may be one reason that we're able to do this. But I'm pretty proud of that lack of turnover number we have.
You should be, and that is something worth noting. I appreciate you saying that. I've got another question related to this because of the staffing and culture and so forth. And it's that there's obviously a missed opportunity when you don't consider hiring people with disabilities, hiring interns, or hiring family members. There are a number of benefits that can come from those, loyalty being one, obviously the tax incentives that also might be applicable. I just today was speaking with an accounting firm owner in Nevada that is bringing on an intern. The state of Nevada gives them a 3-month what's the word I want to use? I'll say incentive because the word's escaping me right now,
Yep.
that they'll actually cover the first 3 months payroll expenses of the intern. And those are things that sometimes are either unaware or overlooked. So what would you say about disabilities, family members, and interns?
Yeah, so my strongest area I could talk about is disability, and only because, and you mentioned at the beginning, and as of the beginning of last month, my 3-year term as president of Stroke Survivors Empowering Each Other was up. But through that, I get to meet so many interesting people, and one of them was a woman named Deb Russell, and Deb has worked for years in advocating hiring individuals with disabilities. She was at Walgreens for a long time. She did a 7-year unbelievable study when Walgreens put a policy in place to put higher incentives on hiring individuals with disability. And what they found in this 7-year study, everything in the business improved. Profitability improved, employee engagement improved, the workers' comp claims went down, sick days went down. It was unbelievable. And with 7 years of hard data in a giant company, it really proved out that it's not just, we're not giving somebody with disability an opportunity. We are actually helping our business overall. So from that standpoint, she's unbelievable. All my knowledge on that comes from her, but she does a great job explaining that. And the ironic thing is, after she did all this, she ended up having a stroke. So now she ended up being on that side of somebody with a disability. She's 90% recovered at this point, but she personally said that helped her be in the individuals with disabilities shoes and really saw more from that side, and just made her stronger at what she does. So that's been amazing.
Did they have any assumptions, or is there any conclusive information as to why those improvements took place?
Yeah, I know they have a study out there. I know she's got the data. I don't know what those were, but I think going in, I think some of the outputs really surprised them, but obviously positively surprised them.
Yep, good. And coincidentally, I have an employee that has had a stroke, and it was an interesting experience to have him go through the stroke, have the stroke, be in the hospital, recover from that, return to work, and see his recovery. And it's at least within the company, it was one of those humbling moments of life is so short and fragile.
Right.
You know, I think everybody kind of focused and doubled down a little bit more on, I guess I need to be more present with the work I'm doing, just because of how this person obviously had just at a moment's notice that stroke occur. So that was interesting.
We could do a whole additional podcast on talking about stroke, and I personally have had a stroke 8.5 years ago, and I am very fortunate, fully recovered, which does not happen. I think I'm in the 8% category. I think about 8% of the people feel that they fully recover for a stroke. But I went through quite a path to get here mentally, and that was a big deal, but changed my whole outlook on business and life and everything. And so that's we probably don't have time for that now, but I love discussing that.
Well, two things. I think you've already mentioned maybe 3 or 4 topics that we could have exclusively as episodes. So that's good. But the second thing is you brought up the stroke. I was going to ask, I know it happened back in 2014.
Yes.
Give us some context. I mean, obviously it comes out of the blue. Where were you? What happened? And how does your perception of life now differ from before you had the stroke?
Yeah, I'll answer the first part first. The one I'll tell you, in my mind, my grandma saved my life, and I'll tell you why. For what was it? About 6 months before my stroke, she had a stroke, ended up passing away from it, but because of it, our whole family learned a lot about stroke. And so when my stroke occurred, February 6th of 2014, I was in the parking lot at work. We were having a business development meeting. I was just showing up to the office, bringing coffee and donuts and bagels. My brother was with me. He was working with me at the time. I was grabbing some of the food out of the back seat of the car. He was the opposite side. He looks across at me and he goes, "Are you okay?" I go, "No, my left side's going numb. My speech is slurred. I'm having a stroke. Get me to the hospital." He came over to my side of the car. By the time he got there, I couldn't talk. My whole left side was numb. I was incoherent. I didn't know what was going on. And so the fact that I was able to recognize and call it out before he got over there, because of what we learned from my grandmother, I think really, really got me to the hospital so quick that I'll give her credit that saved my life.
That's amazing. That is absolutely wonderful. So how does your perception of life change now?
Perception. I've always been, I think, happy-go-lucky and everything.
Yeah.
I was never high stress or anything. That's not where the stroke happened. But what it did for me is made me look, and we talked about this a little bit already, but made me look at really what was important to me from a business standpoint. What did I like doing? What was I good at? I was managing partner of the firm at that time, and I look back now. And I probably wasn't, I shouldn't even say probably, I wasn't that good at it. I did it by default. It was not my passions. I'm not a process, procedure, KPI. I'm not that. I am someone that loves being out, educating CPAs, tax preparers, telling them what opportunities there are for them to help their clients, informing the whole industry through the podcast, through articles, through every avenue I have, which is unbelievable now. I, after a few years, decided, you know what, that's really where my strengths are. Why am I trying to manage this firm? My partner really convinced me that he would have been good at managing the firm. I pretty much didn't agree for a while. I look back now, man, we were in the wrong positions. He should have been managing the firm from day one, because that's where his passions are and that's where his strengths are. And my strengths are out doing what I do now. And in the 5 years, it took me 3 years to make this change. In the 5 years since we'd made the change, our business has grown 800%. So wow. I think it's played out pretty nice.
I love it. I love it. So I've got one last topic that I wanted to bring up with you. I know it's something that we've briefly discussed earlier that I'd like the listeners to hear about, and it's our thoughts regarding mental health, running a business, being the business owners as we are, and working with so many of our clients and they're being business owners. So often we deal with issues that really come and involve mental health. So I just wanted to get your take on that, because I know some people personally struggle with it, or they have family members dealing with it that they're trying to address from a distance while running their company. So what are your thoughts?
My thought is this is another hour discussion that we could go into. We keep going on to these that we could go forever on, but I'm very fortunate. I get asked to speak at a lot of conferences. A new presentation that I've been doing this year is called Mental Health Awareness Beyond Burnout. And so it gets into this whole, in our industry in general. I mean, we are stressed. I mean, it is nonstop, especially the last 3 years. Tax season hasn't ended. And with, like we've talked about, the employee shortage, it's not going to end for a while. So we need to do things to manage that. Stress on its own is not bad. I mean, because in short spurts, stress can, hey, I need to get this project done in an hour. Boom, that stress, you get it done, and that stress goes away. Unfortunately, if that stress keeps going and then turns into uncontrolled stress could turn into burnout. Well, that's where you become unproductive. And that's unfortunately what's happening too often in our industry because of the long hours, because of the pandemic, because of the employee shortage. And then unfortunately, and I'm truncating a lot of this, but unfortunately, that uncontrolled burnout can turn into not only mental health issues, but mental illness, which is a very significant thing, which unfortunately is a lot more prevalent than probably anybody listening knows. Because when I'm out doing this presentation, there are every time afterwards, someone will come up to me, multiple people come up to me and tell me their story of how going through mental illness. And I relate to them because post-stroke, this is something that I dealt with, was mental illness. My brain was in control. I wasn't in control of my brain. And it was a very scary situation. I'm very fortunate to be out of it, but that is something I like to talk about, to share my story, and to help hopefully destigmatize mental illness that too many people are going through.
I appreciate that. This is something that I've addressed a number of times. And just to add to what you were sharing, first of all, it should be something that we're willing to talk about a little bit more openly.
Yep.
I fear that too many people have stigmas or they have reservations to bring it up, whether it's themselves or others. And I think having the conversation open does facilitate that conversation. The second thing is I think we just need to, first of all, acknowledge that asking for help is totally appropriate. The analogy I like to give is that to say that someone is needing this type of help, where they're working with a therapist, a clinician, a psychiatrist, it's basically saying, not that I'm broken, but rather I'd like to be better. I think things could be better, can be improved upon. It's like an athlete going to a coach. It's not because they're a bad athlete they need a coach. It's because they're a great athlete and they want to get better.
Yep.
And so if you can look at life that way, I think it can help with the mental health stresses that we put on ourselves. And then the last thing that I would really want to throw out there is realize that there is help available. I think too often people start to feel like the world is collapsing on them. They start to feel isolated, alone, and really there is a lot of resource out there that we should be taking advantage of. And I hope and invite my listeners to, if you're in that situation, please reach out, whether it be family, friend, or professional assistance. The resources are there, and there's nothing wrong with saying, I just need to talk to someone. And lastly, I guess, I hope we're all willing to listen. It's nice to be a listening ear and be at least open to hearing what people are feeling. And oftentimes just expressing that can cause a great deal of relief. So there's a few additional thoughts there.
That's awesome, Roger. I agree completely. Listening, though, is the key. That's the one. When I did the presentation last week and I got to listening and how important that was, by that time, I think I was crying my eyes out, and everybody in the audience was. But it was extremely important to get that information out, and I really appreciated everybody's feedback afterwards. So, yep, thank you.
Yeah, the thing that I've found helpful is with my clients, with actually a lot of youth that I've worked with, it's when you can create a safe environment, a safe zone where they can feel in that safe space that they can be open, transparent, and non-judged. That non-judgmental experience is so relieving for so many people because they just need to feel acceptance, love, and sometimes they just don't have it in any other venue. And to provide that to individuals is hugely important. So, yeah. Very well said.
Yep.
So these are great topics that we just kind of bullet point hit upon. Randy, this has been a great episode.
Yeah, I really enjoyed it. Everything you asked me about is something that I'm passionate about talking about, so I appreciate it. And if we ever want to do an hour on any one of those topics, I'm more than happy to come back and discuss them.
You bet. I'll definitely check on that. So here's the parting thing, and then I'm going to wrap things up. You have an award-winning craft beer. You said you ship it around. I'm just curious, what can you tell us about the beer? What's so great about it?
Yeah, so we don't brew the beer. We sell everybody else's beer. My partner, Chris Quinn, is a world-renowned expert when it comes to craft beer, and he's actually affected the craft beer industry in my mind. He'll say he hasn't, but he has, with a lot of the way he treats beer. Beer is kind of a living thing. You have to treat it nicely to keep it in the best condition. And so he's figured out ways to do that. But he's just passionate. It goes back to passion. He is extremely passionate about beer. So I was able to get to know Chris while I was recovering from my stroke. I got involved with him. He asked me to come in as a partner in the brewery, and not the brewery. Look at, I even said brewery.
They see.
In the craft beer bar and bottle shop. And it has been such a fun run just to be part of that industry. It's been just an industry that has had a lot of collaboration and a lot of good friends made in it. And we're very fortunate that our bar and the liquor store each individually has been named one of the top craft beer bars in the country, and our liquor store I think has been named the top craft beer bar in the country at some point, and it always gets listed as the top one in Illinois. So very fortunate to be associated with the team we have at the Beer Temple.
That is awesome. That is awesome. So just pure coincidence. Last week I was on a podcast. It was two buddies, Mike and Blaine. And basically it's just two dudes talking about whatever topics. And each episode is based on a beer. Basically, they each bring in a beer. People send them beers and they just kind of talk about that beer that they got. I mean, it's hysterically funny. It's kind of fun. So yeah, that's a good show. All right. So I'm going to wrap this up. I'm going to come back to you for a closing thought. But before I give my summary of today's discussion, what I wanted to do is just point out to our listeners that in the episode description, you can go there for more information about Randy's firm, Tri-Merit Specialty Tax Professionals, and how it is that they can perhaps assist you as you work with your clients to offer quality tax specialty services. So I would invite you to go to the episode description and learn a little bit more about what that resource is to you as you're working with your clients and how you might be able to team up with Tri-Merit and take advantage of those services there. Secondarily, what I wanted to do is also in the episode description, put some information related to how you can, in fact, actually become more of a CFO and advisor, working with your clients beyond just the traditional accounting services that you're offering, and literally get into more of the CFO and advisory space to do, as we were discussing earlier, make sure that they're taking advantage of the various liability or opportunities that they have to limit their tax liabilities and obviously keep and make more money. So with that being said, check out the episode description and make the most of the information that's available there. Now, as a summary, we covered the gamut. One of the things I was excited to talk about today regarding taxes is just the opportunity that exists to go beyond tax preparation, to get into that planning space, that for our clients, there are numerous services that we could actually identify that they can benefit from, and we can be the facilitator of that, where we come in with an expertise in R&D tax credits. We can come in with, let's say, the cost segregations and so forth. We went through those, and I felt that that was a great summation of what it is as tax professionals we can choose to specialize in. So I appreciated that discussion. The other that I thought that we did well was talk about the culture and the employees. So many of the people I'm talking to today have great growth opportunities in their business, but struggle with the staffing. And when we talked about staffing, we considered things that could draw in employees, retain them as employees, give them opportunities to be passionately involved in areas of the business that they like and with clients they prefer. It's just, what can we do to bring in and retain them? And I thought that was a worthwhile discussion. We also, at the same time, talked a little bit about niching. I don't want to forget about that. That's always something that comes up quite a bit. But the last thing that I thought was really helpful was this conversation we had about mental health. So many of the people that I work with, especially as business owners, do at times have bouts of depression. It becomes somewhat difficult and hard. Realize that there is a good deal of resource out there to help individuals. Part of that, let me just do a shameless plug that here at Universal Accounting, we do have coaches that are specifically designed to assist with not just marketing, selling, offering quality services, but we have a life coach team that it actually exists because of this very important issue. So many people in starting and growing their businesses struggle to realize that so much of their personal health and well-being determines the success they're going to have in business. And whenever things become, let's say, imposter syndrome, self-doubt, depression, you've got to tackle those things and deal with them in order for your business to thrive. That business is basically living off of the energy you bring into it, and you've got to deliver for it to be successful. So great discussions. I loved it. And obviously we ended on basically the award-winning craft beer and bottle shop in Chicago. So there's a full circle of all the things that we talked about. Randy, what would you like to leave as a closing thought?
Well, Roger, first off, just thanks for having me here. It's been a blast. But I think the most important thing we talked about today, we had fun in every topic, but the most important thing was the mental health awareness. And I agree completely with you. The biggest thing you can do if you're struggling, in my mind, is don't keep it inside. You need to share, whether it's with your family, your spouse, a coworker. Share and then seek that help, because those counselors are there, those advisors, those therapists are there, and you may go to one and maybe it's not the right one. Go to the next one. Go to the next one. It took me 3 before I got to a point where I was able to get past the issues that were going on. So my final thought is, if you're struggling with anything, don't keep it inside. Look for somebody to turn to for help.
Perfect. Thank you, Randy. As a summation or a wrap up of this, I just want to invite everyone to subscribe to the podcast. Obviously, do so and notate, follow, get notifications as you would for the episodes as they're released. Take a moment and listen to the past episodes that we've had. We've had on some amazing guests that you want to listen to. And then likewise, Randy has his own show. Check out the Unique CPA and see if that's something that also helps you as you're gathering information and as you work and operate as an accounting professional. As well, if you have information or want to have more information about the principles we've discussed today or applying these things in your business, feel free to reach out to us here at Universal Accounting. You can contact us at 801-265-3777, or you can visit us at universalaccountingschool.com. And with that being said, always remember this: if it's about accounting, it is universal. Take care and have a great day, and be safe out there, everyone.